Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings today. We're looking at Orange County Bancorp Inc. and a notice about a company-wide pause on trading. Sounds intriguing, right? Before we dive in, if you like getting clear, no-nonsense insights from these official documents, make sure you are subscribed. And hey, join our Discord community, linked in the description below for more real-time discussions. So what is this all about? Well, Orange County Bancorp, or OC Bancorp as we'll call them, is informing the public and its employees about something called a blackout period. Think of it like a temporary freeze. This report is specifically about a temporary suspension of trading related to the company's employee benefit plans. That might sound a bit dry, but it has real consequences for the folks working there, especially the higher-ups. On the 10th of October 2025, Oxy Bancorp issued a notice about an upcoming blackout period for trading in their common stock. This isn't just a suggestion, folks. It is being done under a specific rule called Regulation BTR, which is part of the Sarbanes-Oxley Act of 2002. That is a law designed to protect investors and make sure companies are being honest and transparent. Now, why is this happening? The main reason is a change in who is managing their employee 401k plan. They are moving the plan S record keeping and services from Empower Retirement LLC to Principal. This kind of transition requires a temporary halt in trading. Imagine trying to move all your important files from one office to another. You put a sign on the door saying closed for moving, so nothing gets lost or mixed up. That is essentially what is happening here, but with people's retirement money and company stock. This trading freeze is set to begin on the 10th of November 2025, and it is expected to last until the week of the 30th of November 2025. So for about 3 weeks, certain people want to be able to buy or sell OC Bancorp stock through their retirement accounts. Here is the important part for the insiders. Under these rules, executive officers and directors of OC Bancorp will generally not be allowed to trade in the company S stock during this blackout period. This restriction even applies to company stock they might hold outside of their 401k plan, so no buying or selling for them during this time. This helps prevent insider trading abuse, ensuring that company leadership isn't making big stock moves based on information that others don't have, especially when the system is undergoing a change. If you're an employee or just someone interested, you can get more information about this blackout period. The company has designated Michael Lesler, who is the Executive Vice President and Chief Financial Officer. You can reach out to him for the actual start and end dates of the blackout period and any other questions you might have. They've also attached the actual notice document as an exhibit to this filing. Think of it as the official memo that went out to all the executives and directors. Now, when we look at OC Bancorp, their common stock trades on the Nasdaq Stock Market LLC under the ticker symbol OBT. This gives us a clue about the company's size and how it is perceived in the public market. It is a publicly traded company, meaning its stock is available for anyone to buy and sell. Interestingly, OC Bancorp has checked the box indicating they are an emerging growth company. This means they meet certain criteria that allow them to follow less strict reporting requirements compared to larger, more established companies. They have also elected to not use the extended transition period for new or revised financial accounting standards. This suggests they are trying to keep up with reporting best practices, even as a smaller, growing entity. What is our takeaway on this filing? Well, it is not about flashy revenue numbers or profit margins, but it is a crucial look at corporate governance and employee protections. The fact that OC Bancorp is carefully following the rules around blackout periods under the Sarbanes-Oxley Act is a positive sign. It shows they are aware of the importance of transparency and preventing insider trading, especially when there are changes happening within the company S-Core benefit plans. The move from Empower Retirement to Principal for their 401k plan is a significant operational shift. While it is a temporary inconvenience for employees wanting to trade, it is likely aimed at improving services or reducing costs in the long run. The company S leaders are restricted, which is a good thing for market fairness. However, as an emerging growth company, there is always a degree of risk. We don't have the detailed financial tables in this particular filing to analyze their performance, but this blackout notice itself tells us about their commitment to regulatory compliance. The key risk here isn't a sudden financial downturn, but rather the potential for employee dissatisfaction if the transition isn't smooth or if communication about the blackout period is unclear. Overall, OC Bancorp appears to be navigating its operations responsibly by adhering to regulations for employee benefit plans. It signals a company that is trying to grow while maintaining a good standing with the watchdogs. The long-term success for them will depend on how well this plan transition plays out and how they continue to manage their growth as an emerging company. Alright, that is our look into this OC Bancorp filing. What is your take on these trading suspensions and what they mean for employees and investors? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to check out the Discord community link in the description for more discussions. Thanks for watching, and I'll see you in the next decode.